Alright guys, so we have a good one for you today, and every day is something new. And it seems that the US can't seem to take a step back from a China escalation. But at the same time, Washington can't do much without collapsing their own economy. So instead of imposing the 100% tariff punishment, Scott Bessent is now on a PR campaign. He's trying to convince the world. And convince the world of what? The classic China is a bad actor spiel. Now, this is the same playbook Yellen did back in 2023 and 2024. The story back then was Chinese industrial overcapacity. China was producing too many EVs and exported out too much steel. Now, for Bessent, he is framing the rare earth export controls as a malicious move against the global economy. A classic us versus them move, but is this really convincing?
This is China versus the rest of the world. They announced these export controls that are going to go into effect next month, and we have aggressively pushed back against them. We're not sure where this came from, why the Chinese have decided to do it now, because you can see that that the United States is led by a man of peace, Donald Trump, and China. This was a provocative move.
Now, we need to remind Bessent that China did honor the agreement to ramp up exports. Yes, there was a period before the meeting in Lancaster House where Beijing did put the squeeze on the US. And when you decide to punish China with all the restrictions on chips, what do you think is going to happen? Now, Chinese rare earth exports to the US collapsed heavily in April and May. And that's what happens when you impose a 145% tariff on Chinese goods. But the real pain only lasted for 1 month. Now exports to the US have more or less normalized. The US is terrified of a repeat, especially when Trump is trying to force global chip companies to reshore. But even during the curbs, China still shipped volumes to the world. All the rare earths still went to India, Vietnam, Thailand, and even Germany. So it was mainly a squeeze on Trump and to prevent transshipments through US allies. And just like how the US can weaponize the dollar directly and interest rates indirectly, China understands their supply chain dominance. They have two levers to pull. They can choke off supply to the US to raise production costs, and this is going to spook out potential investors. If you're a Japanese chip maker, would you build a semiconductor plant where there's no affordable rare earth supply? And secondly, China can always flood the market with supply to grab more market share. Then US mines will instantly be even more uncompetitive. Federal subsidies will be ramped up. And China's latest statement is a warning directly to Scott Bessent and his friends. If the US continues on its wrong course, China will firmly take necessary measures to safeguard its legitimate rights and interests. And here's the crazy part. Beijing hasn't taken any action yet, and the US is already freaking out. It shows us the level of dependence and fear if a second cutoff happens. Scott Bessent is in panic mode and is trying to U-turn everything. Suddenly, US threats of 100% tariffs on China, they are evaporating away. Apparently, there's now still a Xi-Trump meeting going on in Korea, and Bessent announced that a 100% tariff on China doesn't have to happen. Guess what? Now US-China relations are good. And if you wondered why markets rallied yesterday, that's why. He is in damage control mode and trying to prevent a further implosion. There's no workaround here. Should US stocks continue melting down, it could take the dollar down as well. Not only would bonds be toxic, now equities will be in question. So we are really at the razor's edge here. Now, Bessent himself also admitted that US supply chains have been wrecked, and once again, it's China's fault that there are no rare earth production sites in the United States.
This is a 3-decade problem in the making. The U.S. used to control rare earth processing and refining, and the Chinese bought a U.S. company. It was required that it was kept in the U.S. for 5 years. 5 years and a day, they moved it to China. What's happened over the past 2 decades is anytime a refining or processing facility has been set up either in the U.S. or in a free market country, the Chinese come in and undercut the price.
Well, he's right about one thing. Washington has neglected building a network of supply chains for many decades. Building military bases doesn't count. Those don't generate critical rare earths. And reading between the lines, we can see what Bessent's trying to do. He's trying to do two things simultaneously. And I'm sure the Chinese, they're not blind to this. Stevie Wonder can see the plan coming a mile away. And according to him, the US will be meeting with the G7 and other allies. We will not let these export restrictions and monitoring go on. Bessent also expects substantial global support from the Europeans, from the Indians, and from the democracies in Asia. Now, what does this remind us of? It sounds like another economic coalition against China. It's the Fortress America plan once again, except the excuse is now Chinese rare earth supply. So here we go again. More likely than not, he wants friends and allies to raise trade barriers against China. Don't restrict your rare earth exports, especially to the US, or everyone will hammer you with a 20 or 30% tariff on your exports. Now, I'm quite sure this will fail because trade with China goes beyond just rare earths, and no economy on earth can take another shock, especially to their high tech industries. Now, besides, China can simply throttle US supply pacifically and still give the world a lifeline. So, Bessent is really playing with fire here. The US is pulling on both sides. They have done a Taco Tuesday, that much is certain. But they're also going behind the building to work out a secret shady deal. But let's look at the long term consequences. And if we compile all of the mess, it's obvious US China decoupling will not stop. Retaliation goes beyond just enacting the rare earth curbs. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Chinese investments into the United States has been collapsing since the first trade war in 2018. Completed deals at a peak hit $57 billion, which is a ton of money in a single year, but it has dropped all the way down to a very, very sad amount. It's only $2 billion this year so far. In other words, China has lost faith in the US economy. And what do you think will happen if Trump re escalates the trade war? This number will fall to the same number as Chinese imports of US soybeans, and that number is zero. And this poses a very big problem. US technology and expertise they are lacking, so Chinese knowledge now won't be shared, especially in the mining and heavy industrial sectors. But it goes beyond that. Now more funds will need to be raised either through debt or shaking down global allies. Now even Japan and Korea they are resisting, so the US government themselves will need to buy bigger stakes in all these companies. China will also ramp up their financial decoupling. Yes, it's the good old dumping of US treasuries, it's old school stuff, but yet very effective in applying pressure. Now, in the latest treasury data, Beijing has dumped yet another boatload of US bonds. They have either sold or allowed over $25 billion in bonds to mature. Either way, it's not looking good. US spending keeps growing, and as China continues dumping, more supply of bonds will need to be issued. No matter how much the Fed tries to cut, US bond yields have still an enormous amount of upwards pressure. So why can China decouple so confidently? Because the world still needs to trade with Beijing. We have mentioned multiple times. until we are blue in the face how the US trade war will not crush Chinese exports. Now, when you impose a global 10 or 20% tariff on the world, everyone will need to drop their cost of production. They will opt for cheaper, more affordable inputs to climb the tariff wall to sell to US consumers. And who produces the bulk of all these materials or products? It's China. You only need to rub two brain cells together to figure this one out. And now the data is confirming what we have known for months. Chinese exports are surging. Beijing now has a stronger hand when confronting the United States. Overall, Chinese shipments have grown at the fastest pace in 6 months. Exports have risen by 8.3% in September, hitting nearly $330 billion. The trade war is benefiting China. Now, shipments to the US have plunged by 27%, but in the grand scheme of things, it's just a blip. Even the EU has no choice but to buy Chinese goods. Non US countries grew their Chinese imports by around 15%. So even if Trump decides to hit China with 1,000% or 1,000,000% tariff, it will be meaningless. Many Chinese goods to the US today, like EVs, they're as good as embargoed already. So China isn't afraid and their export machine is still functioning extremely well. And that's why Beijing is confident to throw down the rare earths card. It's also why China is confident in de-dollarizing their trade. So the longer this trade war continues, the more exports China pushes out, the worse it will be for the reserve currency. We are talking about more RMB transactions taking place, so Washington has more to lose in this confrontation than the Chinese. There's also another trend Bessent should be concerned about, and that's the amount of Chinese import growth as well. Now, exports have risen by 8.3%, and that is indeed impressive. But what's also shocking is China's imports rising by 7.4% in September as well. In other words, the Chinese, they are buying more and more stuff from the world. Since June, China has been importing more goods from trading partners, and that gives Beijing another avenue of influence. As the US closes off their markets, China is opening theirs, and this is a globalization response to Trump isolating the US economy. It's a good play by the Chinese, but absolutely horrible for US hegemony. If China sells more to the world and they buy more from the world, it kind of changes things. Now they have both the supply and demand power, immense leverage when it comes to international and trade negotiations. Now, cross border payments is a big one. Currently, 30% of China's trade in goods is settled in the RMB, its own local currency. In addition, 50% of cross border trade, including financial flows, are in the RMB. Now, envision a future where China keeps exporting and importing more, especially when the US loses ground in global trade. Suddenly, Beijing can ask for the majority of trade to be settled in the RMB, and that is probably coming down the road, probably happening right now as we speak. Bessent is writing a check that he just can't cash. The moment the tariff war was launched, China began playing their own set of cards. We'll go out into the world and start making more trade deals, we'll buy more, we're going to sell more to countries to grab market share. It's not rocket science. And when Trump takes an action, Beijing simply does the opposite. Ultimately, this is not good for the dollar. And this chart says it all. And I'm going to make it really simple to understand this one. As the US exports less to the world and its share of global GDP falls, something interesting also happens. Global reserves of US dollars also dropped. It has gone from nearly 90% to under 60% today. Trump's tariff war, which is the worst in over 100 years, is going to accelerate this process. China wrapping up their exports is also going to supercharge this. So we have to hang tight, guys. We are moving towards a truly bifurcated world. The dollarization is not going to stop. And if you're sticking to the old playbook, it's time to update your beliefs. There are no rules anymore. This is a global hell in a cell and free for all. But let me know what you think. Will Bessent really form a coalition against China? And does Washington actually have a proper game plan? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.